Hello there. We are starting on binaryoptions.net.eu a new series, if you want, a timeless series, and the purpose of this series is to show you things that are happening on a constant basis on the currency pairs, starting with the most important majors and moving towards the less liquid, if you want, crosses, tips and tricks to trade a pair, what to look for, and so on. We will start, of course, with the euro-US dollar, as it is the most important pair of them all. Now, I would like to focus at the beginning on the fact that any currency pair, like you see here, these are all currency pairs, a lot of currency pairs, any currency pair, it is traveling, or actually it is showing the differences between the currencies of different countries. I'm talking about here, on the case of the euro-US dollar, I'm talking about the differences, the economic differences between the European economy and the economic differences between the American economy. Based on those results, on those economic releases, markets are moving. Now, besides fundamental analysis, what moves markets is technical analysis, and for that, any trading platform is offering an arsenal of indicators, technical indicators, oscillators, and so on and so forth. This is the JForex trading platform, but the MetaTrader is still even much more popular than that, but offering the same indicator. Well, it is worth noting that we are trading a currency pair here, and therefore differences between the two economies should be considered. The most important thing to consider when trading the euro-US dollar pair are the following. First of all, it is the most liquid pair of them all, so this is extremely important. So number one is the most liquid currency pair that is being offered. In other words, hands are being exchanged on a constant basis, on a daily basis, on the euro-US dollar, more than any other currency pair. This means a lot of people are sitting on the bid and on the ask, and therefore for the euro-US dollar to start a trend, we need a good fundamental reason. It is not like it's going to move just like that no matter what. It has the lowest spread possible. So number two, it has the lowest spread possible. What does it mean, the lowest spreads possible? Well, first of all, when you trade the euro-US dollar or any other currency pair, you are looking at the spread. Basically, a broker function with based on the spread or the difference between the bid and the ask price. If you want to sell, for example, the quotation now on the euro-US dollar is 1.1614. Now, if you want to sell the euro-US dollar, then basically you are selling from the bid price. If you want to buy it, you are buying from the ask price. And the difference between the bid and the ask is being called a spread. The smaller the difference, the more appealing the currency pair is for traders, not only for binary options traders, but also for currency traders. Well, this currency pair offers a negative swap. What does it mean, a negative swap? It means that if you are trading the spot market, for example, on the euro-US dollar, and you are, it doesn't matter if you are buying or selling, but at the end of the day, the broker will charge you an interest based on the interest rate differential of the two currencies between, in this case, the euro and the US dollar. So let's write here on the screen that it offers a negative swap. Now, number four, and this is extremely important for binary option traders, is that the euro-US dollar has the tendency to move in ranges at the beginning of the week, and only for the ranges to be broken or reversed starting with late Wednesday and moving into the end of week trading. For the euro-US dollar market, it's more important the Thursday and the Friday trading than Monday, Tuesday, Wednesday. Well, normally when you trade spot market. But if you're trading binary options, when it doesn't really matter if the market is moving, as long as you are on the right side of the trade, you can make a profit with market going only 1 pip in your favor, and you'll check in more than 70% rate of return. Now, bearing in mind, so let's write here first that it has the tendency to move in ranges at the beginning of the week. Having that in mind, it means that for the starting of the trading week, what we should do is to go on the lower time frames, like the 1 hour chart if you want, or even the 5-minute chart, and try to identify oversold and overbought levels based on different indicators. For example, if you go and let's go and put the RSI, for example, the relative strength index, you put it on the screen, and then from Monday, Tuesday, Wednesday, we are looking for overbought and oversold territory, meaning you wait for the oscillator to go above the 70 level or to go below the 30 level before buying put or call options. But this only until something like Wednesday in the middle of the day, because at that moment of time or after that, ranges are going to be broken. Or you can go even on the lower time frame. For example, you can go on the 5-minute chart if you want, using the same one oscillator or one possible, let's say, not trend, but oscillator, definitely. But they are basically, the oscillators are showing you exactly the same thing. They are showing you overbought and oversold levels. And every time on the lower time frames, when market comes into the overbought territory, like it is here, and like it is here, and like it is here as well, we should only go and buy put options Monday, Tuesday, and Wednesday in the morning. Now, what would be the expiration date? Well, the expiration date can only be, let's say, according to the time frame that you are trading. So if you are trading the 5-minute time frame here, and you're looking at the lower time frame, looking for ranges, then definitely that you're not going to choose expiration date, end of week expiration date, or end of day expiration date. Actually, you may choose end of day expiration date if the market is evolving somewhere towards, let's say, late in the trading day. But otherwise, you should go for something like, I don't know, 30 minutes expiration date, or even hourly expiration date, but no more. In this case, only today for the euro US dollar, you should have had basically on the prerogatives that on the conditions that we just said. If you bought put options here, here, and here with 30 minutes expiration date or even more, all the options basically would have expired in the money based on this ranging situation on the euro US dollar. So the fourth thing was that it has the tendency to move in ranges. Now, the next thing to consider on the euro US dollar is that, like any currency pair, it has or it is moved by interest rates and the monetary policies the central banks are conducting. The two central banks that are the most important for the euro US dollar are, of course, the ECB, the European Central Bank, and the Federal Reserve in the United States. The ECB is releasing the press conference and the interest rate decision the first Thursday of each and every month, now with the exception of January, like it is now, because holidays are there and it's not on the first Thursday, but it is moved towards the end of the week. Otherwise, first Thursday around the middle of the London session, you'll have the European Central Bank coming with the interest rate decision. So let's write here that it is moving strongly on the ECB interest rate decision on the first Thursday of each month. Now, of course, the other side of the story, if you want, or the other side of the Atlantic should be considered, as it is moving strongly on the Federal Reserve monetary policy, which is announced on every 6th Wednesday. Basically, if you are based in Europe, this would be somewhere after the, let's say, London session, and right into somewhere the middle of the North American session. So the Federal Reserve in the United States is meeting every 6 weeks to decide on the monetary policy, and the decision is scheduled for Wednesday. As of recently, I'm talking about, I don't know, 1 year, one and a half years, every 2 to 3 meetings every 2 to 3 meetings are followed by a press conference where economic projections for the US economy are presented, and questions and answers are taking place. Extreme volatility is surrounding the event because you never know what these guys are going to say, so look for bigger expiration date when you trade binary options in order to jump, if you want, over the event. Now, the most important economic events in Europe, definitely there are influencing the euro-US dollar. So the most important economic events are the following. You are looking at, let me go here for the next thing. So in here we have number 7. In Europe we have the CPI, or inflation if you want. So all you have to do is to go over the internet to look at the economic calendar, which is free, by the way, to take a look, and then look when the CPI is being released on the inflation, as euro-US dollar is moving the most on the release. Then you have the jobs data, of course, like the unemployment rate and so on. Then the PMI. The PMI represents Purchasing Manager Index, and the PMI offers traders with a glimpse or an idea about what the economy is doing. And the PMI, CPI, and all these releases are coming between the ECB meetings once a month. So if the ECB is meeting on the first Thursday of February, and then on the first Thursday of March, any releases in between February and March will have the purpose, or will be used by traders to have an educated guess about what the central bank is going to do next time when they are meeting. And then after the CPI and the jobs data, the PMI, of course, we should look for the GDP, or the gross domestic product, which is the total value of goods and services in an economy, and the IFO. Now, IFO in Germany, it is actually a survey, but it's a survey based on what the German economy is doing, how the German companies are evolving, and so on. And this is important because Germany, being the most important economy in the Eurozone, what's happening in Germany is affecting the Eurozone as well. Now the same is being valid on the United States, basically. So on the US side, number 8, on the US side, the most important thing is CPI, or inflation. So let's write here that on the US we have the CPI as well, inflation. Now on the CPI in the United States, look for the core CPI, as the core CPI is acting, or is the favorite measure move of inflation by the Federal Reserve. Then look for the NFP, or the non-farm payrolls, as they are being called, non-farm payrolls. Now the non-farm payrolls economic release is coming on every first Friday, no matter what. And is being released, of course, referring to the jobs data that are being created or not in the US economy on the previous month. Then you should look for the ISM releases. ISM comes from Institute for Supply Management, and it is the equivalent of the PMI in Europe, with the let's say, with the explanation that it is being called ISM non-manufacturing and ISM manufacturing, meaning it is referring to the manufacturing sector or to the non-manufacturing sector. In non-manufacturing being services. In Europe it is being called PMI services and PMI manufacturing, but actually they are exactly the same. So they are referring to the manufacturing and services sectors. And of course we also have other important economic release like the durable goods. On the durable goods, focus on the detailed number regarding, let's say, the core durable goods, because they have the tendency to have the roots into the GDP. So how the durable goods are moving, the core number there, then we should have an idea about the consumer, the power of the consumer's spending, and of course we'll have an idea about the GDP. If we have an idea about the GDP and know how the economy is moving, then we know if the currency should be influenced by central banks' moves or not. Then of course the other releases like the GDP, like mentioned, or the consumer confidence. And of course the retail sales. Well, with that being said, all this information is also to be found, let me put it somewhere in here, is also to be found as a text below this this video analysis, this video recording. And I wanted to offer you a glimpse into trading the Euro-US dollar, or how to trade Euro-US dollar in and out, no matter what month is, no matter what happened. These are the economic releases that are influencing the pair, and also to use a bit of a technical analysis to show you how to trade this currency pair on less important trading days, if you want. Thank you guys for being here. We'll move on with around 4 to 5 currency pairs on the month, and then we'll cover also equities and indices. Thank you and have a great day. Bye bye.